Good afternoon, everyone. So once again, I'm Edward from UOB Asset Management. I would like to say my greetings to the online audiences as well. So today I'll be talking about one of the favorite asset class that Singaporeans really love. It's about REITs. So in the next 15 minutes or so, I'll be actually articulating the case of why APAC REITs, and of course the greening of it, as well as the investment opportunity for all of us for a sustainable future. Yep. So these are the key features of our UOB APAC Green REIT ETF, the world's first APAC Green Real Estate Investment Trust ETF. The index that we are tracking is actually developed by SGX as part of the SGX IH product suite in collaboration with UOB AM. We aims to contribute to the greening of the real estate sector with a focus on Asia Pacific. We also have an initial seeding from our parent company UOB, and we aims for a quarterly distribution of 4% per annum, and of course creating that positive green impact for the world, right? So I think why the case for REITs as well as sustainable REITs. I think everyone actually know what REITs are, collectively, collective investment vehicles where your money is actually put together with other investors to invest in a professionally managed real estate assets. All right, and of course, what I want to actually highlight is REITs can definitely be a good addition to your typical stock and bond portfolio because they actually aims to provide stable income as well as long-term capital appreciation. And of course, the underlying assets actually provide steady rental stream and which flows through to investors as regular income distributions as well. So next slide. Yep. Okay, great. So why Asia Pacific? Because our strategy actually focus a lot on Asia Pacific. Now, if you look in terms of a demographic, right? I think Asia Pacific is home to 4.4 billion people. Now, that's about 57% of the global population. And if you look at the United Nations Department of Economic Social Affairs report, it is actually reported that, by 2030, the urban population in Asia will actually cross, 2.5 billion. And by 2050, it will actually move up the scale to 3 billion. So what does that, all actually translate to? Now, if you look in terms of, the urban, when we talk about urban areas, right, it's actually generally associated with, greater productivity due to agglomerations of economies, as well as, there are more opportunities in terms of employment, as well as a greater quality of life in urban areas, in a higher education. Now, with the rise in urban population, we are definitely seeing a trend of growth, in working age adults across Asia Pacific. Now, Cushman and Wakefield, they are actually global commercial real estate service firm, is actually projecting that this growth in working age adults actually translate to a demand in an additional 1.35 billion square feet of office, across Asia Pacific region. Now, that is needless to say, APAC real estate is definitely set to grow rapidly, and that is true for now. It is actually growing at a tremendous pace. So if you look, now we have actually covered the demographic aspect, and if we switch our lens to the investment opportunity and we couple with it, I think it's even a more appealing case, right? Now, if you compare the Asia Pacific REITs compared to the broader Asia Pacific equity markets, in the long term, it actually outperformed the broader equity markets with a return of 7.8% compared to about 5% for the MSCI Asia Pacific. And not only that, in terms of yields, Asia Pacific generally generate higher absolute relative yields compared to equities, as well as also compared to the government bonds. So The next will be that, in terms of dividend regulation, I think most of y'all have known, is required by law to actually distribute at least 90% of the taxable incomes and earned from the real estate investment directly to investors through dividend distribution. Now you have your friendly taxation rules, you have steady dividend incomes, long-term capital appreciation, and that has actually allowed REITs to deliver competitive total return historically, as shown in the previous slide. And that is, of course, these are the good benefits and the advantages, but another one thing is also the diversification purpose. They have their comparatively low correlation with major asset classes, especially the broader equity markets, and it's another compelling reason for investors who are actually to give consideration when constructing one's portfolio. Now, I think in everyone's mind today, I think all the speakers have actually talked about it. I think the biggest concern is that the rise in the interest rate. Now, will it actually affect the REITs market? Now, REITs is typically priced for its yields, and of course, it's a defensive asset class, so it will potentially become less attractive when interest rate rises. But however, this doesn't mean that you should actually avoid investing in REITs in the rising interest rate environment. So by right, in reality, rising interest rate typically means that the economy is actually improving. So it actually allows them to grow occupancy rates, build new properties, hike rents, and this has actually improved the revenue and cash flows for the REITs. So there's a very good positive impact of strong economies, which outweighs the negative repercussion of higher interest rate as well. And of course, we do expect interest rate to rise as central banks around the world will start to taper. But the good news is that we are actually potentially entering a really sweet spot where the forecasted to see a gradual rise in interest rate, but not too much. And as long as it's in this gradual manner, what we feel is that REITs are poised to enjoy optimal benefits in an inflationary environment through rental growth and capital appreciation. Yeah. So when we look in terms of the current macro environment still remains conducive for REITs. Now, in terms of the valuation standpoint, I think it's really still decent, and the yield spread basis is not at overstretched levels. Now, the yield spread is typically slightly below the mean now, but I think the current trend that you're seeing is actually quite similar to the one that we have seen in the past cycle. So we do expect this yield spread trend to actually narrow further, but there's a room for capital appreciation as well. And definitely the hunt for yields will continue as we are still in a rather low interest rate environment. So generally, the APAC REITs dividends, yields are about 4 to 5% on average. The dividends are expected to continue to grow at a robust pace of 5.2%. And today, at the post-COVID arena, we are also seeing an uptick in the M&A activities. Now that's going to be really attractive to drive the growth as well. And also with the borders and countries reopening, we are expected to see recovery in trade, travel, and tourism, which really will be beneficial for the APAC REITs region. Now, of course, the pandemic, though, is actually really, devastating and all, but it's definitely a wake-up call for all of us for environmental and social responsibility. Now, if you look at today, the weather is really hot. We have news coming out that, we reached one of the highest at about 36.8 degrees in Straits Times paper, I think, in yesterday. We are definitely feeling the whole climate change. And, and that is actually moving tremendous ground in terms of sustainability. Governments, they are categorizing the adoption of sustainability practices. And major corporates throughout the world, are reassessing the business strategies to meet their sustainable targets or goal. And the world is waking up to the investment opportunity that this brings. And definitely, it is nothing new to the REITs sector as well. So there was a survey done by a JLL, another global commercial real estate service company. And these are some of the key findings. 7 in 10 occupiers are now willing to pay a rental premium to lease green buildings. The adoption of net zero carbon emission is set to double in Asia Pacific by 2025. And of course, the green certification of buildings drive, firstly, higher occupancy, higher rents, higher tenant retention, and overall higher value to the assets, which is definitely the buildings, right? So when we talk about ESG, okay, great. So in many ways, if you look at over here, ESG is not really a new concept for REITs, but it has now increasingly, become important in the recent year. So what we observe is REITs nowadays have doubled their focus on ESG issues, such as improving the energy consumption, water efficiency, waste management, and also on the social and the governance sector aspect as well, in terms of employee turnover, improvement of your health, and the list goes on. So if you have come to realize, sustainable or green REITs are made out of more than just green building itself. But no doubt, when you talk about REITs, the centerpiece of what makes a REIT is still a building. So what is green building? I think green buildings basically aims to reduce or eliminate negative impacts on the environmental and climate changes. And of course, there are many definitions of green building, and it may actually vary. But if you can see from these IFC reports, green buildings are not just a low risk asset, but able to provide higher value too. So like I mentioned before, they offer both economic, financial benefits as well as intangible benefits in the sense of, good health, better employee management as well. Yep. So when we talk about the opportunities, right, one thing that you have to remember is that buildings and construction account for 39% of global CO2 emission. Now, to make things worse, global building stock is also expected to, double in area by 2060. Now, that's going to cause an increase in carbon emission occurring right now. So there is an increasing pressure for real estates, to be green, and that, in fact, in return, actually create a USD 17.8 trillion investment opportunities in green buildings by 2030 in the Asia Pacific region. Now, it is the highest among the rest of the geographical areas. So we have definitely a few reasons of why APAC REITs is attractive. So so we see over here higher return versus Asia Pacific equities. You have your attractive yields, and in terms of green REITs, because sustainability is the mainstream now, right? And not only that, the mindset of the occupiers are different. They're willing to pay for green buildings, and green buildings in general create investment opportunities in Asia Pacific. So that is why we have this UOB APAC Green REIT ETF. So what is it all about? Let me just give you a brief explanation. So this ETF tracks the IH UOB APAC Yield Focus Green REITs Index, and the index is actually comprised of a basket of 50 REITs which deliver high dividend yield to investors by investing in of course, what I've mentioned, Asia Pacific, including Japan, and of course focus on green REITs which are identified via high ESG quality. Now, the ESG quality is based by GRESB Real Estate Assessment. So what is GRESB? Who is GRESB? So GRESB is a mission-driven as well as investor-led organization providing standardized and validated ESG or environmental, social, and governance data to the capital markets. They are established in 2009, and they has actually become the world-leading ESG benchmark of real estates and infrastructure investment across the world. So the index itself is actually optimized for improve in the risk-adjusted performance via three filtration process. When the slides come up, you can actually see it. Yep. Sorry, I think there's a delay in okay, there you go. So these are the three different filtration process. You have the dividend yield trap, which actually choose REITs that actually meet the liquidity requirement that are passed through this filter. Now, this is to actually avoid investing in any poor quality REITs. And secondly, thereafter, they are further segregated and ranked based on market capitalization. And lastly, green tilting. This is what we do. We actually reward REITs that are greener, right, using the GRESB environmental score. So the next will be looking into some of the returns compared to the green REITs index that we actually track compared to the green REITs ETF that we have in the market. Generally, a lot of people think that, oh, by investing in green, that does it actually affect performance? I think the answer is not really. If you look at the both 3 years and 1 year, they are really quite decent. But of course, you have to bear in mind that the market condition right now is being affected as well. Yep. So there you go. So we have both, the next slide, I will also show you how it has been performing versus major asset classes. So you have our ETF compared to the MSCI Asia Pacific equity, as well as the bond asset class, as well as the global equity market. And if you can see, right, it's actually quite resilient given that, we have seen so much turmoil and volatility in the market for this year itself. So I think, it actually proved that having this green tilting, it actually proved in the terms of the resiliency as well as in the long term, I think, you definitely have that opportunity for profit. So how about, we have talked so much about profit. What about the purpose, right? So we have this green impact measurement dashboard where we actually have 4 scopes that we measure. We measure the greenhouse gas emission, water consumption, energy consumption, as well as, how many green building certification we have in these whole REITs ETF. So just to put it in the layman terms, the 2% improvement in the greenhouse gas emission is actually equivalent to reducing greenhouse gas emission from 400 homes energy use for 1 year. And of course, the 8% lower of water consumption means that you are saving water which can fill at least 37 Olympic-sized swimming pools. So this is how we actually measure the green impact. Now with that, with all the optimization as well as the screening and scoring components, especially on the ESG part, we are able to deliver both the profit together with purpose. Now this is the sector allocation breakdown, and as I've mentioned, it's focused on Asia Pacific region. That's why you have the country allocation in terms of Japan, Australia, Singapore, and Hong Kong. So coming closer to the end of my presentation, these are some of the top 10 constituents that we have in our ETF. So one thing is that I just want you to know, I'm not going to go through all, but these are the REITs that have a very solid sustainability plan to reach some of these sustainable goals, for themselves plan. They have a very detailed disclosure plan as well. So let's say for Dexus 1, right, where, they actually manage and create high quality workplace across the office, industrial, retail, and healthcare. In terms of their sustainability aspect, they are actually committed to achieve net zero emission by this year itself. So in one of the sustainable projects that they actually run is that in May 2020, they actually completed one of Australia's largest car park solar projects at Willow Shopping Centre, and that project actually includes, I think, about 4,800 solar PV panels that actually generate approximately 2,500 megawatts per annum, which is equivalent to the usage of 370 Queensland's household. So each and individual have their own kind of plans to work towards their sustainability goal, and they are really amazing. So with that, I think these are some of the information that we have for the REITs ETF, Green REITs ETF, and that I would actually like to summarize my presentation, rather quick one. So what is it? This is actually the first APAC Green REITs solution that in the world, and then secondly, why? I think sustainability or green REITs are an emerging trend, but I wouldn't say it's emerging, it's actually already in the mainstream, right? We got to do something for a sustainable future, and definitely is an opportunity for profit and purpose. So I think let's all of us, work together for forging a sustainable future for ourselves as well as the younger generation. Thank you so much.